Let's move over now to the ordoracle.com. Of course, we have Tim Ord on every Tuesday and Thursday. It is fantastic to have him on, and it has been quite educational, really, over the past few months here with everything going on. Strongly recommend checking out his website. That is ord-oracle.com. Additionally, you can go over to TFNN.com. Click over on the services tab right there and take a look at the secret science of market tops and 6 secret ratios every trader should know. Tim, how are you doing?
Good. Glad to be on again. Can you see my charts?
So he says we have the charts up. He is about to post them in the den, and then I will be able to see it. But I believe we have them up and running right now.
Oh, good. All right. This is kind of interesting. Kind of changed my tune here a little bit, but the first chart is the New York declining issues over total. Actually, the top window in chart number 1 here is the NYSE McClellan oscillator, and we showed this last week. This is kind of a repeat, but this is where we are right now. We basically hit minus 300 and went to plus 200. And that's a bull situation, just a sign of strength off of a bottom. That's one sign of strength. Then the bottom one is the 5-day average of the advanced decline, and it must go from 0.7 to 3 in 21 days. And we had that also triggered, kind of a different method. Then chart 2 here is WAG breast thrust indicator, and it also triggered. It's a NYSE advanced issues over total issues. You take a 10-day average, has to go from 0.4 to 0.6 within 10 days, and it did that. So anyhow, you got a lot. My point is, you got a lot of internal strength off that low we had back in April. So I was kind of looking for a consolidation because we had a bunch of gaps and all this other stuff. Well, here's what's searching around, trying to find out. I was looking for a pullback to find panic in the ticks and trend to trigger the next signal. A lot of the previous, over the years, it kind of changes gradually. But over the recent past, I guess over the last year or so, a reading of 1.2 on the trend or higher shows panic, and that's bullish. And a tick reading below minus 300 or lower is bullish, and that combination usually leads the bottom within 2 days. Well, it's changed over the last this go around. If you look back at this, getting kind of used to this drawing stuff. Let me put this might be a little better, but anyhow, this going back to this would be the not the April 7th low, but the low of April 21st.
Yeah. And
there, if you notice, the trend came in 1.24 with 181 downtick readings. That signaled the bottom, and it signals a low within 2 days, and it did. Second day was a low. And back here on first part of May, we have something similar to that. We have a minus 210 downtick reading on this day right here. Then on this day right here, we have a 1.32, which signaled a bullish situation. So this is the new rules, at least how this rally is going. Today, last time I checked the trend, we're at 1.73. We don't know what this hasn't closed yet, but it's actually holding this vicinity. So most likely we're closed in that vicinity. And the only thing we need now is a trend close or a tick close around minus 200 or less. And that's what I'm saying, what's different. I didn't kind of ignored those last 2 trades because they never got down to minus 200. So if you get 150 downtick readings, I think that's close enough. The market wants to go up. I thought we might feel the gap. We may not. The market's just kind of leaving everybody behind. Yeah. So I think in general, this market's going to keep going because the trend and tick are keep giving bullish signs, not the ideal ones I like to see, but either way, they're pushing this market higher.
Yeah.
So, you got to go with the flow. You got to, pick your spot, I guess. So anyhow, will I get one on the close today? We'll have to wait and see, but maybe the trend will probably trigger today. The ticks, both those signals, you got to have a trend and tick close within 1 day of each other. So you could have a trend close today of 1.7 and a tick of minus 200 tomorrow. That would qualify for a buy. Or you could have a minus 200 tick yesterday and a trend today of 1.2. That still qualifies. So I think we may get it here. But what's a little bit disturbing, this is kind of I posted last time. The top window is the VIX, and the next, which is this window up here, and the next window down is the SPX VIX ratio. And this here is the SP. I think it's the SPX. But anyhow, it's kind of extended. You get the VIX or the SPX VIX ratio up against the Bollinger Band. Normally, there's a consolidation.
Right.
So we may, at worst, we may not fill the gap. We actually may just pull sideways here, kind of go sideways before we go higher again. So I think the market's not going to let you in. That's what it's starting to look like.
Kind of hear you, yeah.
Yeah, that's what it's kind of doing. So, but if you get enough panic in the ticks and trend, and so far we got the trend today, so it's not going to pull back much. I thought we might pull back down to this gap we had here actually Monday's gap is right there. And we may not even do that, so I don't know. But the internals are actually strong. So it's kind of a news-driven situation. Trump's been out there doing a lot, and evidently the market's starting to respond to it. So we'll see how that goes, but I could be getting long here before maybe today, maybe tomorrow. It depends what the ticks do over the next, a couple of days. Seasonality is actually over the 6 best trading weeks of the year. Seasonality wise is from May 24th to June 5th, which starts next Friday. So there's no sign of a top of any consequence other than possibly you may fill the gap, which is around 5,700. Bar that, I think we're just going to just kind of creep up, and today be the 4th day up. We're up again tomorrow at 5 days in a row. That predicts market will be higher within 5 days, 83% of the time. So there's a lot of kind of momentum on this market. If you notice, it's not really zooming up. These zoom up markets kind of kill the rally. This is kind of just creeping up, and these creep up markets usually kind of keep going.
Yeah.
So and everybody's afraid of those creepy markets. Those are the best because they get on. I've been in them before, and they just keep creeping up. If you look back in this period back here, the market just very small trading ranges, but it just kind of crept up. If you notice right here, it kind of zoomed up. That's when you get in trouble. So I hear the music.
Yeah, no, I mean, this has just been such an amazing past couple weeks trading. Tim, please stay right there, folks. We'll be right back with Tim Ord after the break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Look at his newsletter. Check out his book. You can contact him. Tim, before we went to the break, taking a look at the SPY, and yeah, I mean, it is, as you said, like kind of like a creeping rally, right? And that doesn't take a bunch of wind and energy out of everything, and it can kind of continue to the upside. You know, I'm seeing some stuff as well. You know, one of the things I've been looking at is like the high yield corporate bonds, which is, you know, those don't get bought. Those aren't memed, right? So you don't have a bunch of retail traders buying those things, right? It tends to be more, you know, institutions or funds. And I mean, that is showing risk on too, you know?
Yeah, it's you gotta, you know, you really can't have opinions on the market. I try to be opinionless, and if the only thing I worry about is trying to find where the panic is, and I have rules by the panic. You know, trend readings 1.2 higher. You know, tick readings less than minus 300. Now it's around 200. So the rules change a little bit, and you got to change with them. So, but as long as that. You know, especially today, 1.73 on the trend, you know, there's no worthwhile pullback forming here other than maybe test that gap, and I don't think we'll even get there. We'll have to wait and see. I think the public's getting left alone here. Last time I got out was, I think it was May 9th, up around that, what was it, 55, I don't know, 550, so I kind of missed part of this rally, but it wants to go higher. So these trend readings don't show up only at lows. So they don't show up at tops. So, you know, thing wants to go higher. So we'll see how the next today trades and tomorrow trades. But I may be long here for. I don't know. It depends what the trend does today. So we'll see what happens. But we can go with the gold market.
Absolutely. Let's take a look at that right now.
Yeah, it's just probably down into June. It's going to take its time, evidently going down. But we talked about this 3 drives to the top pattern. It's kind of a repeat. But where's my signal thing here? Yeah, this is the first top right here. This is the second top right here, and this is the third top. 3 drives to a top pattern. You got to have off the second top. You got to have an increase in volume, which you can see really did. So that was kind of a show of weakness right there. Then rallied to new highs, and it's kind of hard to pick out exactly where that high is going to be. We thought around 50, and we got out close to that. I think we're up to 52.5 or something, some up in that range. Right now, we started the pullback. If you notice, yesterday. We were running into the lower Bollinger Band, and after we closed below it, a lot of times you'll get support, and market may try to fill the gap. The gap most likely would be resistance, because to get through that gap, you got to have volume of this magnitude, which is about 40 million shares. And I don't think we're going to get 40 million shares into that gap. So once we probably get the gap, it's going to be resistance, and we're probably going to resume down. Time-wise, it's probably going to be June and July. I don't know how fast its decline goes. I guess you could draw up, parallel lines, figure out close to it, but it might be around the July 4th time frame. A lot of times that July 4th time frame for the gold market, if it's going up, it's a lot of times a high. If you're going down, it could be a low. But anyhow, that 39 area is going to be good support. Now, I have some other indicators probably help pick out that low, but right now, the bottom window is the 18-day average. Let me get another. Yeah, it's the 18-day average of the advance. It's up down volume. Anything below -10 is bearish. We're at -15. And next one is a GDX advance decline with an 18-day average. It's anything below -10. We're at -16 is bearish. So we're in a downtrend. As long as those two indicators stay below -10, that's where those lines are. The downtrend's in force, so it may try to bounce a couple of times, but in general, we're in a weak position on GDX. So, but it's in an uptrend. It's not like there's no bottom right here right now.
Right.
A lot of times these two bottom indicators get down around -20 area. To really start signaling exhaustion to the downside, and that may be one clue. We're not real close to it, but we're getting closer, I guess you might say. But it seems like -20, if you notice, whoops, go back here. If you notice here, this last low, both those two indicators got below -20, and that was pretty much the low. So that may happen here and be something I'll be watching for. So,
okay.
Anyhow, right now, trend's down. You have a question?
No. I was just, I was looking at the miners kind of while you were going through this, right? Because we're talking about these small penny stocks. I mean, some of these guys are continuing to pop, even today with this down. I mean, we're looking at VGZ's up 2.92. Your Goro, I mean, this is an interesting guy, but I mean, that's up 21% today. I'm not sure what to make of that equity at all, but yeah, I mean.
Yeah, that's on a monthly chart, something big's going on with that.
Yeah.
I kind of loaded up on it. This thing it's acting kind of weird. I've seen these charts before, like coming off these major lows like this. So something is going on in a big way. So I added to that position here. So this is still in the early stages. The Bollinger we're above the mid Bollinger Band on the monthlies, and the upper Bollinger Band haven't even turned up yet. It's going to start pressing against that upper Bollinger Band and bend that thing up. So I think if anything has a chance to be a $10 stock, this one could be it. So no promises, but it's doing a lot of good things that I've seen charts with the volume coming in over the last several months. That's smart money buying in a big way. And so this is an early stage of a major rally. So I hate to give high price or targets to this thing because actually I really don't know, but it's still in the early stages. Even though it's gone up here quite a bit, I still think on a bigger time frames it's still a buy.
But I will say, like, a lot of, like, looking at this chart, I mean, a lot of the movement to the upside, besides the gap that preceded in November 5th, I mean, the volume has been, on updrafts in it, right? It's an interesting equity for sure. But
yeah, there's some other ones starting to pop too. All these little ones are going to start popping all over the place. So I still think we're in early stages here. So we're running out of time already.
Oh no! Stay to the next one because we have some questions as well. If you're okay with that.
Yep.
Okay.
Yep. I got a couple more charts anyhow.
Fantastic. That works. Well, there's the music. Tim, please stay right there, folks. We'll be right back with Tim Ord after the break. Welcome back, everybody. This is Jacob Shoup. We got a special thing going on today. We have Tim Ord on for yet another segment. Got some charts taking a look at, and then some questions as well. You can go visit him at ord-oracle.com. Tim, we were looking at the GDX before we went to the break.
Yeah, we're looking at this chart. This is another reason why I sold that position. This is a monthly chart. You get above 80% above the upper Bollinger Band, which these times you did. And that's the reason why I picked around 50. That was about 80% above. It's since backed off. But that's the reason I picked that spot. So I kind of eyeballed it and I think, well, we're pretty close. So anyhow, and it got support around 40, which is pretty close to 39. So you had to bust out above that trend line. That trend line goes back to 2020. So it's a long trend line. So it's going to be a strong support area. So RSI on the monthly's got up around 50 or around 70. That's another reason why. Here's a bigger trend. This is the one that going back to 2014. This is the chart that got you out pretty close to some significant highs. And what it is the GDX GLD ratio. And anything below 0.14 is a buy. We had the last buy, looks like about January of this year. The previous one looks like about, I don't know, February, March of last year. One before that was late 2022, probably October, November or something. Then this is a COVID crash. That was in 2020. That was a March low.
Right.
There's one anyhow. They all get around 1.14. This one back in 2016 stayed below 0.14, the ratio, for, looks like about 6 months, and it's built a base and it rocketed up. And this one is, so 0.14 is basically a good area to buy. Shows that gold stocks are cheap compared to gold. And you get up around 1.2, according to history, going back to 2016. Anything above 0.2 is getting expensive. And that's the reason why I put those blue things there, blue lines. They kind of pick out the top. So we're right between that. We're 0.156. So if we get up around 0.2, that's one reason to look for an exit. I'll have some other indicators, but right now on the bigger time frames, we're not even near a valuation type thing that we're even close to some sort of a high.
Right.
And how long will it take to get there? Months, if not years. So, matter of fact, we haven't got above 0.2 since 2022. So even though the market is pretty much 22 to, it's pretty much doubled since 2023, round off numbers, we're over, we hit a 25 to 50s double, and this ratio is still way below 0.2. So we're still safe to buy, I guess you might say,
right,
on the bigger time frame. So once it gets there at 0.2, I'll be showing that chart, and I'll have some other charts too to see what's going on. So, but bigger time frame looks fine. Short-term time frame, in a nutshell, we're probably pulling back to the 39.40 area in that vicinity. So that's my spiel. So, yeah, questions?
Yes, we do. And I just want to say, I mean, it really does seem like that for both of the kind of indices we're looking at today with the SPY and the GDX. I mean, with some of this kind of recovery, I mean, I speak more with the SPY right now, but with some of the recovery we've seen after these kind of tariff announcements, I mean, even, with somewhat high tariffs, I mean, this is a market that wants higher price, that has the money to put it in, and it's really fascinating. I mean, even some of your riskiest things have been getting bids to the upside, which is really fascinating. So, for questions, we did have one in the den. I'm going to read this out. It says, we get to a Q&A. Oh, go ahead.
Actually, before this, because I think Trump is a big on the equity market and most likely any market, and he's going to keep it. He actually said he's going to keep the coal, or he's going to pump it up pretty much. He says he wants to have the best market they ever had in the world. So I'm thinking he's probably going to produce that, along with it a lot of inflation. So it's going to be a win-win, but trouble when he's out of office, which is 3.5 years from now. Whoever's going to take that over, it could be
stressful,
problematic. I'll put it that way.
Absolutely.
So, but that's a long ways from right now. So we'll enjoy the ride while it's good. So.
I know. I mean, that's kind of how you have to look at it, I guess, right? But I mean, seriously, the way that this has pivoted has been fascinating. But you are right. I mean, everything he's doing really does seem to be. I kind of visualize it as I think he has some kind of really. Maybe he holds like the Gilded Age kind of in a close way to him. A lot of the ways he designs his stuff, how he talks. Some of the industries he's interested in is very reminiscent of, like Vanderbilt era kind of stuff. So I could totally see him, obviously, pumping it. And he said it, as you said.
So which is good for the economy and everything right now. So get what we can while the time's good. So that's how I look at it. But he's stock market friendly. I'll put it that way.
Absolutely. Yeah. So for some of the questions we have one. This is the context of it, and this is what the viewer is saying. I know Tim only looks at the closing tick. There's some interesting similarities in today's seemingly panic-looking trend indicator in the throes of, quote, topping signals all over the place in the current market action. Today's 1.81 trend can fix the short-term numbers fast. Today's trend opened at 1519. It's kind of what he was just asking. I'm not sure if you're. I think we kind of went over this, right? Like you're not seeing necessarily a topping signal right now.
No.
Yeah.
No. I mean, I was actually kind of looking for a pullback and hoping the trend and ticks would, find the next low, but the market doesn't even want to pull back. And so now you got it with the market up, you got a bullish trend reading. That says to me that probably the pullback's not, of any consequence, it's not going to happen. You may get one in July. That may be what's going on here. We rally into July 4th timeframe. A lot of times, seasonality-wise, July 4th is either a high or a low. And so maybe we rocket into July then and get some sort of a pullback. And I was kind of looking at all these gaps ups we had, and normally you get those gaps filled. This market's not doing that. So you got to, you don't tell what the market. You can't tell what the market to do, but the market can tell you what to do.
Totally.
And that's what I'm trying to read. And the panic, even though is not extreme, is good enough to push the market higher. So I'm going with it. So if I get a signal, even though the market's not pulling back, I'm going to take it. And I bet 9 out of 10 times that's usually a winning trade. But I was trying to figure out why this market wasn't pulling back, and I went back and studied the ticks and trend, and they're good enough to put rallies in. So I'm going to go with the current readings. So I'm taking the trend of 1.2 on the close, and instead of a minus 300 tick, I'm taking a minus 200 tick. So if that develops, I'm along the market. So it is what it is. As far as the open goes on the trend, I don't think that's a real good reading. You got to wait until the whole accumulation of today's highs and lows, ups and down volume, that to signal the best trades is take the trend on the close.
Interesting times, Tim. Tim, thank you so much for coming on. We'll see you Tuesday, all right?
All right.
Take care.
Talk to you next week. Thanks a lot.